Welcome to yet another webinar from MedHQ. We are a leading provider of advisory and administrative solutions in healthcare. Next slide, please. So let me begin with introducing myself. I'm Dhara Raval, accounting manager at MedHQ. I've been with MedHQ for over 7 years and have a lot of experience helping clients with their year-end support. I have with me my colleagues, Jackie and Shelley, and my co-presenters as well. Jackie, you want to go first?
Sure. Hi, everybody. My name is Jackie Flores, and I'm an accounting manager at MedHQ, and I've been with the company for over 5 years. Shelley?
Hi, my name is Shelley Sostak, and I am the accounts payable coordinator at MedHQ, and I have been with MedHQ for 2 years. Next slide, please.
Now that we've taken a moment to introduce ourselves, we'll take a moment just to note the items we're going to be presenting on today's webinar. The topics for today include W-9s, 1099s, the audit review support process, tax support, and state and local filings. And with that, Shelley will begin with the first topic. Next slide, please.
As we get into year-end and 1099 filings, it is essential that we cover how we handle setting up a new vendor. We feel the 1099 year-end process will be easier if the vendor is correctly set up from the start. It saves a lot of time and avoids the last-minute hassles for both the client and MedHQ. When you have a new vendor that needs to be added into our system, we at MedHQ require a new vendor form and a W-9. A copy of the vendor's invoice would be helpful as well. This ensures the vendor will be set up correctly from the beginning. It is recommended best practice to provide all three to AP. Why do we need this information? The new vendor form will give AP the information that is needed to ensure the vendor is set up correctly. It is also important approval step to set up a new vendor in the system. Let's look at the new vendor form. Add your center's name and date, the vendor's name, address, phone, and primary contact. Terms. When does the vendor expect payment? And is the invoice due upon receipt? 30 days, 45 days, or something else? Is there a standard GL code for this vendor that the invoice will be coded to? This will assist the invoice when it's entered. Request by. This is the requester's name at the center, your phone number. The account number is the vendor's number, is the customer number that has been assigned to your center by the vendor. By providing this, the account number will print on your checks when payments are made. This assists the vendor when applying the payment to your account correctly. Next slide, please. A W-9 is needed to set up the vendor correctly because it avoids year-end delays in 1099 filing. It prevents common classification issues, such as distinguishing between S-Corps, C-Corps, partnerships, and LLCs that are treated as Corps. Ensure expenses exceed the $600 reporting threshold. What is this reporting threshold? Here is an example. Your vendor may submit a first invoice for $100. Their second invoice is for $300. And the third invoice is for $400. The total paid to this vendor for the year is $800. Any amount paid over $600 requires a W-9. It will maintain accuracy in reporting to the IRS and vendors. An invoice is helpful for confirming the remit to address is correct for mailing payments. This ensures the vendor will receive the payment promptly. The forms would be emailed to the accounts payable medhq.com's email address. The accounts payable department will enter the new vendor into the system and the vendor will be ready for invoice entry. Next slide, please.
All right, so now that we have covered what we require for a smooth 1099 filing, let's go over the 1099s that we usually see for the ASCs. So to begin with, who would be generally furnish a 1099? That would be an entity or a small business, including the self-employed individuals who provided any services during the year, and we paid over $600 to those individuals or entity. Now, the exemptions would be your C Corps, S Corps, LLCs that are formed as corporations or S Corps. We do have some exceptions to this exemptions, which I'll cover as we go. So to go through the first one, the 1099 NEC. It stands for the NEC, non-employee compensation. So for each person in the course of your business, you paid more than $600 to perform any services, including the parts and materials, and who is not your employee. So examples would be your medical director fees, maintenance contract, consulting, any agency staffing that you do, any billing or transcription services, those all would be included. The second one covered under this one is your payments to attorney. So any legal fees that you pay during the year. To note here, the exception that I mentioned before to this exemption is something that is applicable over here. So any payments made to a corporation does not apply to payment for legal services. Therefore, you must report attorney fees even though paid to a corporation, or the gross proceeds, which I'll cover in the next point. A lot of items included in 1099 miscellaneous, but the three main items that we see are ASCs that apply. The first one would be rents, which we report in box 1. The second one is the medical and the healthcare payments. So any payments made over $600 to provider of medical and healthcare services. Anesthesia providers would be your one example. Now again, the exception over here to the corporation also applies in medical and healthcare payments. So any payment made to medical and healthcare service provider, even though a corporation, they would receive a 1099. What would be exempt would be your tax exempt hospital or an extended care facility or a similar organization. Now the gross proceeds to an attorney that we pay, which are not your regular legal fees, but they are paid in the course of trade or business in connection with any settlement agreement that you pay. So anything more than $600, those would be covered under 1099 miscellaneous. So as a general rule, if it's like $600 made to an attorney, legal fees, 1099 NEC is your form. On the other hand, when it's paid for damages, 1099 miscellaneous is your form. And the exception, remember, the corporation, the exception of filing to a corporation does not apply to attorney payments and medical and healthcare service providers. So the other one that we usually see ASCs file is the 1099 INT, which is the 1099 interest. Now we usually see two categories fall into this. One is the payments that you make to physicians for any interest that you pay to them in regards to a member loan that you might have received from them. And those contracts would be covered. And the second one that we usually see are the installment plan that you have for the redemption agreements. So any interest that you pay over the period of time on those installments, those will be covered under these. So they would receive their 1099 INT. Next slide, please. All right, so the recommended timeline. As Shelley mentioned, it would actually start with getting the W-9 and setting up the vendor right. If you're, for some reason, if you're not able to do that, we review the books sometime in late November, and we go through all the details for all the vendors. We make sure you have all your W-9s and tax IDs. We reach out to you if you don't have, and if we do not see that information in the system. We try to get everything buttoned up by late December so you can really file sometime mid-January. We give one last review before we close the December books and inform you. This just avoids any last-minute rush. We try to finish it before the deadline of 31st January. The great part of the process is that our system is very much capable of doing so. It just makes the whole process very seamless. We run reports, we find the information, and we alert you on time. Now, since 1099 is a very important IRS requirement, we try to make sure that you don't have to incur any penalties for late filing, no filing, and just try to stay on top of it. Next slide, please.
The next topic we're going to cover in this webinar is the audit review process and support. This process could be a little bit lengthy in terms of time because we usually begin sometime early November with the preliminary trial balance reports sent to the auditor. And the process ends when the audited financial statements are issued. And that typically occurs first quarter of the new year. The preliminary trial balance typically includes information through the end of October. And once year-end financials are finalized, we can move forward with furnishing them to the auditors along with the final trial balance report. We also include all necessary year-end paperwork, which could include prepaid expenses, accrued wages, and the fixed asset schedule, which includes the accumulated depreciation. We also provide work papers that affect the capital accounts. That can include a detailed distribution history, ownership changes, and any supporting documentation such as subscriptions, redemptions, operating agreements, and amendments. We also comply with GAAP, including the ROA asset and liability schedules. And lastly, as part of our year-end process, we also reconcile all outstanding debt with the banks or lending institutions. Next slide, please. For tax support, it's very similar to our audit review process. It typically follows the same timeline, and the audit firm is usually responsible for also preparing the tax returns. That makes it a little bit easier for us because we've already provided the work papers, and the tax preparers use that for the tax prep as well. Normally, the audit is completed first, and then the tax preparation follows. And we make sure that all the members receive their K-1s in a timely manner in order for them to file their personal return. Using MedHQ's expertise for this process includes a lot of benefits. We will lead the process. We help with any analysis required for items such as revenue, accounts receivable, fixed and variable expenses, and payroll. For example, each month we run a subsequent collections analysis at the end of the period, and that helps us review AR and payments made towards AR, and it helps us determine if we need to increase or decrease our bad debt expense as we move forward month to month. We keep high quality standards and ensure GAAP compliance to minimize issues during the audit or tax prep process. And this helps the ASC focus on their patients and day-to-day operations with less distractions. And lastly, we revise financials in the accounting software and the work papers based on any suggestions made by the auditors or tax accountant. Next slide, please. And finally, our last topic is state and local filings. If requested by the customer, we handle all state and local filings on their behalf. Or at their option, we can also prepare the filings and then send them to the ASC to sign and file. State and local filings do typically vary state to state, but they normally include items such as city tax payments, personal property statements, sales and use tax, the annual LLC filing, the business license renewals, and any other state or local filings. Again, to reiterate, the benefit to using MedHQ to handle all of these items is to reduce the distractions to the administrators or office managers at the ASC so they can focus on daily operations without having to remember or worry about when these items are due. We'll take care of these things so you don't have to. Next slide, please. And this concludes our presentation for today. Our contact information has been provided in case anybody has any questions or would like to reach out on the information or services that we can provide. Do we have any questions?
Jackie, I actually see a question. Shelley, I see a 1099 question if you want to take this one. What if a pay refuses or neglects to provide a PIN?
That's a good question. If a payee refuses to provide a W-9, you should immediately begin backup withholding at the rate of 24% on any reportable payments made to the payee. The business should also make several requests to the payee for the payee's TIN in order to avoid a penalty. Basically, I have found in my experience that if you consider holding the vendor's check, this tends to get the vendor's attention. Also consider no longer using this vendor. Finally, if the vendor still does not provide his W-9, the last resort would be that the 1099 would be filed manually to the IRS.
All right. I see one more question that we could take. Jackie, this one's an audit support question. If you want to take this one, on your audit support slide, you mentioned ROU asset and liability schedules. Is this something new? Can you help me understand what ROU is and why is it now on my financial statements?
Sure, Dara. Yeah, that's a good question. Is this something new? Yes and no. Actually, GAAP implemented the standard 842, which requires the ROU, and the ROU stands for right of use asset and liability. And this 842 is requiring it to be provided on the financial statements whenever the lease term is over 12 months. Prior to that, the information was included, but on the notes to the audited financial statements. Now it's actually part of the balance sheet. So that's the difference. And what this does is it creates greater visibility for the reviewers of the financial statements as to what long-term assets and liabilities are on the books. I think a good example of that is your office lease. The asset portion on the balance sheet represents the use of the asset, in this case, the surgery center's space to conduct daily activities. And then the liability portion breaks down what is due to be paid out over the long term for the use of this space. That part is broken down between long-term and short-term portions. Part of what we do when preparing financial statements is continuously review for any changes in GAAP standards like this one to ensure we're in compliance with GAAP standards.
Okay, all right. So thank you for watching our webinar. And as Jackie mentioned, our contact information is up on the screen. So please reach out for any questions, and thank you again.